You're looking at a weekly chart of the Nasdaq. Welcome to my weekly review. I just wanted to show the weekly that the Nasdaq was down 1.1% last week. You can expect growth stocks to correct 2 to 3%, 2 to 3 times of what the index does. So if your growth stock was down, 3 or 4% last week, that would be normal action. Anyway, that's why I just want to show the weekly, and then here's the daily of the index. And to me, short term, I want to express short term, this is in a uptrend. It's in a power trend with the moving averages stacked. The Nasdaq is above the 21. Heck, I think it even closed above the 10 on Friday, right? Yeah, almost 1% above the 10. So this is a short-term uptrend. The year started off with a nice 15% gain, and then it gave half of it back. February 2nd was the high at 12,269, gave half back, and now is back in another uptrend, but it could not take out the 12,269, so I'm watching for that. Obviously, there's going to be caution ahead of earnings, and then the Federal Reserve has the gears grinding here, and it's very difficult because of all the uncertainty with the Federal Reserve and what they've caused with the banking system. Anyway, I don't want to get into banks or any of that stuff. I trade stocks, and the Russell is one index that's been punished by the banking index, and you can see that. So that's why I'm staying away from it. The mid cap is where a lot of our stocks are traded, and this one is just in a trading range, much like the S&P 500 index, just a trade range. Yeah, short-term uptrend, but longer term, just a trade range through this, 4,000 here. It hasn't really done much, either in either direction. I mean, it's frustrating for shorts and longs. Just grinding through, a bottoming pattern here. And it's taking a real long time. Anyway, I trade stocks, not the index, so I don't want to spend any time on that. There's a narrative that the mega cap tech stocks, are propping up the Nasdaq, and it's partially true. Those big stocks, they move the needle on the indexes. But I could show you a ton of stocks, and I've got it posted on my website. Stocks, many stocks that are outperforming the Nasdaq. Meta was one we had on our watch list, trending higher and looks good. And of course, Apple moves the needle. It's been performing well, and Microsoft. Those are the mega cap tech stocks that are doing well, that are allegedly propping up the Nasdaq. There you say this one. Microsoft pulled back to the 10 and broke out. That's all fine. But I do want to get to some sectors, starting with the semiconductors. And since I'm talking about the mega cap tech stocks driving the index, I'll start with NVDA. This one bumped its head at 280 a couple times last week. I believe it was Monday and Tuesday, and then got the Matambo treatment. There's 280 on Monday, 280 the high on Tuesday, and then it got rejected like Matambo. Yeah, it came down a little bit from 280 to 265, whatever. Close at 270. These are not the stocks that I would be shorting. I know people like, oh, let's short NVIDIA. This is a strong stock. This isn't an uptrend. That's not my style for shorting. What would you like to short, Marty? This is the type of stock. These things that waterfall down with heavy volume and then take weeks. This is like 15 sessions for it just to creep up from, 100 to 110 and just get smacked down again on the moving averages. That's like a bully in the schoolyard pushing the kids down. And you can see, it goes down, 8% in a day, with heavy volume again. The sellers coming back. This is probably just some short covering in here. These low volume days where it just kind of grinds up. But that's the type of stock that I want to short. URI just waterfalling down, then, creeps back up, takes a long time, then just gets sold off. Look at all these pink bars here. So anyway, I digress. I want to take a look at some of the semiconductor stocks. That's where I was. ACLS, this has got a lot of eyeballs because it's the first time it's pulled back to its 50 simple moving average since a breakout. So last week was the first week of the second quarter, and these things had tremendous first quarter, so there's going to be some profit taking. Yeah, it pulled back 5.9%, you know, with lighter volume. Is a short week, but I have a feeling the buyers are going to be back in the semiconductor stocks, and that's including NVIDIA and AMD and all the rest of them. But you got to expect some profit to be taken. You know, there's darn few stocks that are breaking out and running higher. Anyway, I want to take a look at Lattice. This one here, Slice this 21. It was down all 4 days last week. ALGM, same thing. And it, you know, semiconductors are just being sold. You know, this one had a little more volume. It was a short week last week, though. But anyway, we'll take a look at the weekly. Yeah, ALGM doing nothing wrong since the breakout, just a little pullback on lighter volume here. Did want to, I'd mentioned breakouts and watch lists and everything, and HubSpot was on our watch list. This thing tried to break out and then pulled back to a pivot area. And it's like, don't give up on them just because I wouldn't even call that a failed breakout. It was a breakout, then a breakdown, but still near a pivot area. Workday did the same thing, you know, breakout from a pivot area and then pulled back. You could see last week there was some profit taking weakness, but don't give up on those. And ACLS is what reminded me of this, because we had this and it broke out. And this is when the market was not very good. To 88, 80 to 88, 10% gain. We sold it and it pulled back to the pivot area. And we stuck with it and bought it again, and it ripped higher. So stay with these things. It's an important concept to remember. Just because you're on a watch list and the thing breaks out and then breaks down, don't give up on it. Stay with it. Keep an eyeball on it. Okay, that's enough of the semiconductors. I want to go to the gold rush because all that glitters is gold. This is this is really defensive, and if gold is your best idea, this is not good for growth stocks. But you cannot deny AU Anglo Gold breaking out of a base here is getting some heavy volume, so you got to go with what the market gives you, and that's what it's giving you right now. GFI, we had this on our watch list. You can see the double bottom base here and a nice breakout. And I hope some of you got that one. Not that, you guys are clicking the mouse. Doesn't matter what I say. We're all adults here. You're going to click your mouse when you want to. This one's still set up in a base. I believe it's on our watch list here, our ready list. At MC Stock Charts, that one looks good. In GLD, this is the ETF. And this one broke out. The ETF is getting a lot of volume here, so a lot of interest. Let's take a look at the weekly here. Nice cup with handle breakout here. So we'll see if that breakout can sustain itself, because a lot of the others have not. Anyway, I'm going to go to the retail group. I love retail. It's not getting a lot of love right now. There are a few stocks that are. One of them is ELF. And you can see last week when the Nasdaq was down 1.3%, this was down, 1.2. So just looks like it had an inside week here. That's what you want to see. Strong stock, holding gains. Nothing to see here. Not doing anything wrong. This is Ulta Beauty, another, pulled back to its 50 last week as the, general market weakness down 4.5%, but it's still in a nice uptrend. And one more retail stock. Which one was it that I was going to show? Oh, of course. Got to do the shoe stock, ONON. This one, we got to look at the weekly here. It had this big breakout. Like I say, breakouts aren't really working too great right now. But it had this little short stroke pattern and gave back some last week on a downgrade, 11.5% below its 52-week and 5% down last week. Not bad. So we went through the semis, we went through gold, we went through retail. Oh, the drugs. The drug stocks, NVO, just, broke out of a base. And this one actually is working higher. It, held its gains, made new highs. There's nothing not to like here with NVO. It's just a long-term winner and a great company. I'm going to stick with the larger cap drug stocks because people, get a little skittish, when the market corrects. And some of those small biotech stocks, they really sell off hard. They go up fast and they go down fast. This is VRTX, the base on base pattern. This one's on our ready list as well, and it's showing strength. I'd like to see more volume in here, but last week when the Nasdaq was down, this one was up 2%, so it is showing strength. And there you can see the neighbor base pattern. VRTX looks good. Regeneron. This one, just another, big cap tech stock, and it's not real expensive. Got a PE of 18 here, just broke out of a base here, holding its gains. I like this one as well. I just want to go through some leading stocks because, like I say, it's not all the mega cap tech stocks that are, driving the index. This is AXON. This one broke out. It's holding its gains. It's above its 21. That's what you like to see, making new highs last week as well. Same with PERI Network, commercial services advertising stock. You can see all the big blue bars here. And we'll take a look at the weekly. Yeah, 1.39% as the Nasdaq was down. So that one's showing relative strength. Spotify. Let's go to Spotify. This one flat last week, essentially trying to break out here out of this stage one base. We'll see. It's got earnings April 25th, so coming right up. So maybe that'll be a catalyst. That one's doing well. LNTH is a medical product stock. This one, nice stage one cup with handle base here. It had a breakout, but still lingering around that buy area. It was up a little bit last week while the Nasdaq was down, holding its gains above the 10. Like to see more volume come in again, but we'll see. It's got earnings coming up, in a few weeks as well. So maybe that will be a catalyst. Who knows? SMCI, a lot of eyeballs on this one. Broke out of a base and then pulled back. It got downgraded, I believe, on Friday. And I think a lot of people like another crack here at that level here. It coincides with its 50. So if it pulls back to the 50, we'll see if it finds support there. If it can, that looks like a nice area of interest for me. Palo Alto Networks is definitely one of the leading cybersecurity stocks. You got to look at the weekly on this one. Just a huge consolidation pattern. The longer the base, the higher in space. So definitely looking for more good things for Palo Alto Networks. They don't have earnings till May 31st, so it'll take a little while for that one. And then VRTX, not the drug stock, but the software stock, broke out of a stage one base, and this one is sustaining its gain. So don't tell anybody. Trending nicely. You got to take a look at the weekly. It's a weekly review, and there you can see this huge correction, like 99.9% of the software stocks, and this stage one base, and now it's powered higher on volume. Like the last 5 weeks. So it was stocks that go up 5 weeks in a row. Keep your eyeballs on those. Even though there's general market weakness, this one's showing strength. So you got to like that one. And the last one, I'm going to end with Lululemon. I like these retail names because they're easy to understand. For one, I'm a simpleton, and this has got a nice base here. Stage one base, just a cup pattern. You can see the power earnings gap. People who follow that, the power earnings gap, this one gapped up and is holding its gains. That's what you want to see. Anyway, there's just a lot of action going on, a lot of news, and we have earnings coming up, second quarter earnings season. We can see the Nasdaq has been up 15% in the first quarter. We can see if it will continue to show strength in the second quarter. I doubt if any of these companies are going to say the sky is falling, but maybe some weakness in the second half of 2023. And I believe that's what the correction in 2022 is all about. This is anticipated, it's expected. So we'll just see the severity of it. Want to hear from all these corporations this month. We never give up.